In this video, we're going to be breaking down what it takes to develop a trading plan, and in my opinion, what a trading plan actually consists of. Welcome back everyone. If you're new, welcome to the channel. And in this video, like I said, we're going to be going through what it takes to develop a trading plan, right? Just a little disclaimer, this is all from my own opinion, okay? This is what I believe makes a great trading plan and what it actually consists of, right? But let's jump straight into it, okay? So the first thing for me, the first thing about developing a trading plan is you need to have it written down physically. You need to have a book or a notebook that tells you everything and tells you exactly where you're entering, where you're trading, okay? I'm going to break this down a little bit clearer. The first thing I would like to see on my trading plan is I would like to see the pair that I'm going to be trading, or the pairs I'm going to be trading, okay? So for some of you guys that are slightly newer to Forex, I would suggest sticking to 1 to 2 pairs maximum that you are trading at a time, okay? By doing this is you allow yourself to stay up to date with what's going on with your pair, okay? If you're trading 5 to 10 different pairs at a time, you're going to confuse yourself. You're not going to understand or know what your pairs are doing at this time or where they're at in terms of price action, okay? So by sticking to 1 to 2 pairs is that you can completely understand what is going on with your own pair. As soon as you jump onto the charts, you know where it's been going, where it's came from, and where it could be going, okay? And this will help increase consistency and eliminate confusion when trading, okay? So the first thing that's going to be on my trading plan is, obviously we're going to be writing this down, guys. We're going to be making a notebook like a business, okay? You need to think of Forex as a business, and you need to have these steps that you're going to follow, okay? So like I said, the first thing I'm going to be writing down is the pairs I'm going to be trading, okay? And I'll put up a few pairs on the screen for you guys if you don't know any for you guys to use. If you're new, maybe try using the minor pairs that are less volatile, but if not, the major pairs, they're all good to use. Some are slightly more volatile than others. So the advantage of just trading 1 to 2 pairs is you can understand and learn their characteristics, right? So every single Forex pair has slightly different characteristics. In terms of market behavior and structure, each pair, they move the same. Technically, they move higher. If they're trending up, there'll be higher highs, higher lows, and continuation, so on. And if they're trending down, there'll be lower highs, lower lows. But each pair has a different characteristics. So this is why it is key that you write down your 1 to 2 pairs and you stick to them and you learn them. So once you've gotten the first step of your trading plan written, and that is deciding what pairs you're going to use, the next step is going to be, what is your strategy? What's the edge in the market that you're going to be using, okay? So all a strategy is simply an edge in the market that gives you a higher probability of something happening than something else. It's what us traders use to get an edge on the market, to basically increase our chance of winning or have a slightly higher probability than something else happening, right? So a trading strategy can be anything. You can buy it from someone, or you can develop it yourself, but you need to make sure that you completely understand what your strategy is, how you're going to be entering, and what your entries are going to look like, and how you're going to be exiting, okay? So let's jump over to the screens. This is just an example strategy that I've made up. Do not use it for yourself. I simply made it up on the spot just to give you guys an example of what I'm actually talking about, right? So like I said, the second thing you're going to be writing down in your trading plan is it's going to be my strategy. What I'll be using to have my edge on the market and increase my probabilities. So here, I've just made it up, right? And this is just the strategy, right? This is an example of what you need to be writing down when developing your plan. Let's say, for example, this is your strategy, okay? We analyze on the 4-hour time frame the direction of the trend, okay? If we can see price trending down, we're going to look for sells, okay? So when you're writing this down in your book, you're going to be saying, right, again, guys, this is just an example. You're going to be saying, right, market's trending down on the 4-hour. So if I see a direction, I'm going to jump into my 1-hour. I'm going to be jumping into my 1-hour, my entry time frame, and I'm going to be looking for price to go below the 20 moving average. So this is just an example I'm giving you guys, okay? So you're going to be writing down, right, I'm going to analyze the market on this time frame. If I see a direction, I'm going to jump into my 1-hour, or whatever time frame you guys are using to enter. And then obviously you guys can trade a pattern. So if you see then a break and retest appear, or if you see a double top pattern, this is when you enter. So for this example, it's just once I see price go below the 20 moving average, I can see the direction of the bias is down, I will enter. And this is what your strategy will look like, okay? And this is what your strategy needs to consist of, and you need to write down. You need to write down the time frame you're going to be analysing the market on and figuring out the directional bias. You need to then have the time frame you're going to be using to enter, okay? This is very important because you need to know exactly what signals you need to see to enter, and you need to write this all down, okay? So in this example, my strategy would be, and what I'd write down would be, analyse the market on the 4 hour. Once you see a directional bias, go into the 1 hour time frame. And once you see that price has moved above or below the moving average, depending on the direction of the trend, you will then enter. So what you need to be writing down is you need to write down the exact entry point you are looking for in order to enter. What this will do is this will help you trade mechanically, and this is what we want in Forex trading. Trading is just about creating a business and following it, okay? Or creating a plan and following it. And you need to trade it mechanically. That's why writing all these things down will help you with that. So once you've written down your strategy and you've written down your entry signals, the timeframes you're going to be analysing on, and the timeframes you're going to be entering on, this then brings me on to the risk management, guys. A lot of people, they neglect risk management. They look at Forex and a get rich quick scheme, but it's just not, okay? It takes time, and controlling the losses is most important, right? So you need to ask yourself, am I okay with risking a lot, or do I not, right? My advice to you would be risk only 1% per trade, okay? So this allows you to stay long term in the market. That's what you want in Forex. It's about protecting your capital, okay? So me, just in my opinion, suggest to you is only risk 1% per trade. So if you have an account that's £1,000, $1,000 or $2,000, you only want to risk 1% of that capital. So let's say your account's $2,000. You only want to risk $20 per trade, okay? This will be your risk management. This is the next thing you're going to be writing down. You can title it risk management, but you need to make sure you understand this and you're following this strictly, okay? So just to recap what we've been talking about, guys, we know the pairs we're going to be trading. We've written down the pairs that we're going to be trading, okay? And we know the characteristics, and we know how they move, and we understand, and we know at all times where they are in terms of price action. You're then going to be writing down, secondly, your strategy, how you're going to be entering, what time frame you're going to be analysing on, and what time frame you're going to be entering on, and what is your exact signal you will be using to enter, okay? And then the third thing that we're talking about now is risk management. You want to be writing down, okay, I'm only going to risk 1% per trade, and then on the other hand of that, if I win, I want to then gain 3% or 2%, okay? So a little thing for you guys is, obviously depending on your strategy and how it works, I would never normally go for anything below 1 to 2 risk reward, okay? When you're going for a 1 to 2 risk reward, this allows you to take 10 trades, win 4 of them, lose 6 of them, and still be in profit, okay? This is the great thing about risk reward, okay? If your reward is higher than your risk, you can afford to take losses, okay? But them losses are controlled. Remember, they're a 1% risk. Just to briefly go over what I'm saying about risk management, you need to be writing down how much you're going to risk per trade on every single trade, and how much you're willing to take when you win, okay? The next thing you can do with risk management is also managing the trades itself. Are you going to let your trade simply take profit or stop loss, or are you going to trail your stop loss, okay? So let's say you start going profit. Are you going to move your entry to break even level, or are you going to keep bringing your stop loss higher and higher to trail your stop, okay? This is what you need to be writing down and following exactly, okay? You can't make any other mistakes on this. You need to be following it exactly and mechanically, right? So the next thing is going to be, how many trades are you going to be taking a day or taking a week, okay? For me personally, how my strategy works, this will obviously depend on how many times your pattern appears. If you're working with the higher time frames, you're more likely to take one trade every other day. But with my strategy, I like to trade the lower time frame, so I can maybe get to see 1 to 2 trades a day. So you need to be telling yourself, how many trades exactly will you be taking a week, let's say, okay? By doing this allows yourself to not overtrade. You're not looking for situations in the market that have nothing to do with your setup, and you avoid taking trades for no reason, okay? So under risk management, you want to be writing down, I will be taking, let's say, 5 trades a week. And then I'll be analysing them and going through them and seeing how I can develop on them, okay? Now, the last thing I want to talk about in the trading plan is psychology. I feel like a lot of traders do neglect this and they don't actually appreciate how much trading has to do with psychology. I would keep a trading journal, okay? So as part of the trading plan is you have a trading journal. You write down every single trade you take and how you feel when you're taking it and how you feel after or how you feel during, okay? And how you were feeling while the setup was happening. Were you feeling hesitant? You knew your setup was appearing but you didn't enter, or you entered late because you were worried that the market wasn't going to go in your favour. To help eliminate this is you need to understand at the core of your beliefs that the market's unique. The market can do anything and the market will do anything, okay? We're simply just following a plan, like I said, guys, following your strategy mechanically and just entering every single time you see your strategy play out, okay? This will help eliminate the emotions of fear. Fear is one of the main factors why traders lose and why traders cannot be consistent. They're too worried about the market going in their favour or the market not going in their favour that they end up taking no trades, or they take trades that are useless or that has got nothing to do with their strategy. So just understand that the market's unique and all we're doing is we're following a set of rules that you have hopefully written down today, and that we're just following it mechanically and letting the probabilities play out, okay? So the last thing is not part of the trading plan, but it's something to help you guys, okay? You need to basically be trading in a 20 sample basis, right? This is something Mark Douglas talks about. You need to backtest in the market your strategy. Like I said earlier, you need to be knowing exactly where you're going to be entering and the exact timeframes you're going to be entering on. This can help be developed through backtesting the markets, okay? You can backtest through TradingView. I'll put a link in the description for you guys to use it, but it's honestly a great tool, okay? Because it allows you to play through old data and get an understanding of what your strategy is going to look like and how your signals are going to play out, okay? But with this 20 sample basis, is you need to take 20 trades in the backtesting market, not risking anything, and you need to take them flawlessly. What do I mean by that? I mean you need to take them the exact way you have told yourself to enter once you see your edge or your strategy appear, okay? So as an example, again, guys, please do not use this strategy. I've literally made it up, but just to help you guys get an understanding, right? Our strategy is we analyze on the 4 hour, and we've got this all written down, okay? We're following it mechanically. We try and find our directional bias on the 4 hour time frame. We see that market is trending up, okay? We then hop into our 1 hour time frame. And this is what you should be doing in the backtesting market. You should be finding your strategy and taking 20 trades and seeing how the results play out, okay? So we see our directional bias on the 4 hour. We then go into our 1 hour to see if price is above the 20 moving average. And if it is, we just enter. So with your strategy, what you'll do is you'll take 20 trades the exact way you've said you will be entering or looking for the entries, right? And if you take 20 trades and you like the results and you are able to execute it flawlessly without any hesitation, then you can look to start going to the live market. But until then, do not, okay? Keep practicing in the back testing market or forward testing with a demo account, okay? Make sure that you've got your trading plan written out and that you can follow the exact rules you have told yourself to enter, okay? Is that you're making no mistakes, you're not hesitating, you are not entering too early or too late, you are following your exact steps you have told yourself to do, and you are just executing mechanically, okay? I know there's a lot of talk in this video, guys, but I really want to help you guys understand and how to develop an actual trading plan. And by having a trading plan it means you're taking it seriously. You're following a set of rules mechanically, and what this will do is it will help increase your probabilities of being consistent, okay? There's a lot of emotions in trading and a lot of psychology behind it, but by having a trading plan is that you can eliminate them emotions. You just say to yourself, okay, I see my setup appearing, so I'm just going to enter, and it does not matter what happens because you know that from your back testing that you have, let's say, a 30-40% win rate. You just have to let the probabilities play out. So you just need to keep taking trade after trade that correlates with your strategy and your plan, and you just let the numbers play out, guys. Hope you guys enjoyed the video. If you have, leave a thumbs up, leave a comment if you have any questions about this or if you're still unclear, and I'll be sure to answer it for you. But I'll see you guys in the next one.